Welcome back to Rekt Radio, the one and only show that sees a market pullback and immediately starts shopping for discounts. I'm Sunny, and folks, when the market gets fearful, we get greedy.
And I'm Cole, here to remind you that trying to catch a falling knife is a great way to lose a finger. This isn't a discount sale, Sonny. It's a liquidation event. The warning signs are flashing bright red.
You see red, I see a glorious fire sale. This is the healthy, necessary breathing room that separates a bubble from a real, sustainable bull market. We can't just go up in a straight line forever. This is the market shaking out the tourists before the real journey begins.
A journey to the center of the earth, perhaps? This isn't a breather, Sonny. This is the entire market starting to roll over. We're seeing widespread profit taken across the board. The optimism is starting to curdle into anxiety. It feels like the party is over and someone just turned on the lights.
The party is just getting started. Profit-taking is a sign of a healthy, functioning market. It means people have made incredible gains and are now rebalancing. That capital doesn't just vanish. It sits on the sidelines waiting for the perfect entry point for the next wave up. This isn't an exodus, it's a tactical redeployment of capital.
Tactical redeployment? It looks like a stampede for the exits to me. When you see strength fading across every major asset, it's not a localized issue. It's a sign that the fundamental belief driving the rally is beginning to crack. People aren't rebalancing, they're cashing out before their profits evaporate. This is what the start of a real downturn looks like.
And I think it's a perfect case study in separating the long-term vision from the short-term noise. Take Bitcoin Cash, for example. It's pulled back, sure, but this is where you can see the difference between a weak project and a strong one weathering a storm.
Oh, Bitcoin Cash. Are we really going there? That's your example of a strong project? It's a perfect example of what I'm talking about. The pullback there isn't just part of a broader market downturn. It's a project-specific failure of momentum. The bulls have completely lost control.
They haven't lost control. They've handed the baton to the value investors. Look past the price for 1 second, Cole. The network has been implementing significant upgrades. They are actively trying to build a more robust ecosystem to attract developers and users for the long haul. A temporary price dip in the face of fundamental development is the definition of a buying opportunity. It's buying future potential at today's prices.
The market doesn't care about potential if the present-day reality is a dumpster fire. You can talk about upgrades all you want, but the technicals are telling a terrifying story. The relative strength index, the RSI, is plummeting. That means buying pressure isn't just weak, it's evaporating in real time.
So the momentum traders are taking a break? That's fine. They were never here for the long term anyway. The people who understand the technology see the progress being made. That's the signal, not the noise of the RSI.
It gets worse. The MACD, the indicator that shows trend momentum, has posted a bearish crossover. That's a classic textbook signal that the upward trend is likely over and a reversal is underway. You're looking at a project with no buy-in pressure and a confirmed signal of a trend change to the downside. Praising its long-term potential right now is like complimenting the beautiful paint job on a sinking ship. It's irrelevant. The asset is taking on water right now.
It's called consolidation, Cole. After a strong run, a period of sideways or downward action is perfectly normal. The price is finding a new, stable floor. The weak hands who bought the top are shaken out, and the committed long-term holders establish a stronger base. This pullback is washing away the speculators and leaving only the true believers. That makes it stronger, not weaker.
It's not finding a floor, it's searching for a bottom, and my guess is it's a lot further down. When the technicals align this negatively, it's not a breather. It's a warning from the market that the narrative has failed and the money is moving on. Ignoring that is pure hopium.
And focusing only on that is pure short-term panic. It all comes down to the big dog anyway. The entire market takes its cues from Bitcoin. All this noise, all this fear, it all gets filtered through the one asset that truly matters. So let's look at the ultimate source of truth. I have the technicals for Bitcoin pulled up right here from TradingView, the one-day chart.
All right, let's do it. Let's consult the oracle and see what story it's weaving today. After this market-wide dip, I can't imagine it's a particularly cheerful one.
It's the most beautiful story of all, a story of deep, unshakable long-term strength. Let's start with the most important indicators, the ones that matter more than any other, the moving averages. They cut through the daily noise and show you the powerful underlying trend. The verdict? Strong buy. Not a buy call, a strong buy. That's the institutional money, the slow and steady accumulators, the smart money. That is the bedrock.
You always start with the rearview mirror. The moving averages tell you about the road you've already traveled. Let's look at the dashboard. Let's talk about the here and now. The oscillators, the tools that measure real-time, right this second momentum, are flashing a clear sell. There it is in plain English. The immediate energy is gone. The buyers have left the building.
But don't you see how incredibly bullish that is? When you have a confirmed strong buy on the long-term trend and a temporary sell on the short-term momentum, it's the classic sign of a healthy bull market pullback. It's exactly what we've been talking about. The deep current is overwhelmingly positive, while the surface is a little choppy, shaking out the weak hands. This is the coiled spring scenario we dream of.
This is a signal of a catastrophic trend reversal, Sonny. It's a massive divergence. It shows the old trend is dying and the new real-time trend is taking over. The strong buy is just the ghost of a rally that's already over. It's bait. It lures in the optimists who are looking at the past right as the sellers are taking control in the present. It's a textbook bull trap.
How can it be a trap when the overall summary, combining every single indicator on the page, is still a buy? Not neutral, not sell. The machine, in its infinite wisdom, crunches all the numbers, your scary oscillators and my mighty moving averages, and it still concludes that the correct position is to buy.
Because the summary is skewed by the lagging indicators. It's being propped up by old news. The real-time forward-looking indicators are screaming sell. The market is telling you that the foundation you think is so strong is actually cracking right under your feet. That buy signal is a house of cards, and the bottom row is being pulled out as we speak. This is a picture of a market on the verge of a breakdown, not a breakout.
That's all for this episode of Rekt Radio. I see a market on sale offering a golden opportunity to buy into a powerful long-term uptrend while the short-term traders are running for the hills. The signal is clear. Stay strong and buy the dip.
I see a market flashing clear warning signs with real-time momentum collapsing and major assets showing textbook reversal patterns. The trend is not your friend when it's about to end. Be careful out there and don't be someone else's exit liquidity. You've been listening to Rekt Radio.